Welcome back, guys, to another video. In my previous videos we have talked about this kind of rule set, and we have backtested these rules on a higher time frame. But in today's video we're gonna backtest these kind of rules on a lower time frame, so you guys see for yourself if this system is profitable, right? So those that are new to the channel, these rules basically mean like this: price trading above the EMAs. Let's do like this. Correction to the 50 EMA, and something like this. So here's the EMA right here, flushes down, and maybe here is the 50 EMA, right, just like that, and price flushes down to the 50 EMA and trades up in an aggressive way and pause here. This would basically mean that we take a buy stop right here and let it run to the upside or do whatever it wants to do, right? And if price starts to come down below the 50 EMA, we simply wait for a new structure to get built up, and then a flush to the 50 EMA, and then our position would, instead of taking something in here, we would wait for new structure to build up, and we would take something simply in here. So in my previous videos, this system has shown profitability. I think we have recorded like 50 trades or something like that, and we have a small sample size, but on 50 sample sizes this has shown profitability. Anyways, so in today's video I was thinking that we could backtest NQ. You guys are probably very familiar with that, but so let's get started with this video. So we actually only have access to the beginning of this year in January, so we will only use one time frame, and let's do like this. So instead of using a weekly time frame, I was thinking in this video we will use a 15 minutes time frame. So yeah, we would simply wait for a new structure here. The thing with a lower time frame is that there is a lot of more noise on a lower time frame than it is on a higher time frame. So we might need more time frames to kind of navigate you through a lower time frame, right? But in this video we will only use one time frame. So as you guys can see, price flushes down to the 50 EMA, flushes below but kind of paused here, and this basically means that this trade right here is completely fine, because we didn't sell off below 50 EMA so aggressively. We kind of paused here and aggressive buying came in this market, and our rules for this video is we set a 1-to-1, and that is break even, and 1-to-5 is our full close. Or if price kind of comes above our 1-to-5 in an aggressive way, we track under each kind of low. Okay, so this price is source higher. Let's wait for our 1-to-5. So we aggressively gets above this 1-to-5, so this basically means that we would track under each kind of low, just like this. So we would close our full position for +6 RR. So let's continue. Market flushes down to the 50 EMA. Now all we are waiting for is price to come a little bit above. So now we wait for new structure. This price is not holding onto the CMAs. We're waiting for new structure. So new structure is in in this market. So all we're waiting for right now is a flash to the 50 MA. Sells below that, so nothing for us to do. New structure is in this market. So we kind of come above the EMAs right here. So I would simply just throw the buy stop right there. Wait for our 1-to-1. 1-to-1 is reached, break even. No risk on the table. Comes very close to our, so our buy stop is right there at these points right there. So we're still in this trade. And there is break even. So cancel that. Let's wait for a pause here. This is a pause. So we simply throw a buy stop at these points right here. It just explodes up, as you guys can see here. This is a break even. Just falls below the 50 MA, starts to get choppy, so we just simply wait for a new structure here. And now we're just trading to the downside right here. So in this case, this might be a reason for us to look short, but let's just wait for new structure. So new structure is coming in. Sells below the 50 MA. Like on a lower time frame as well, like counter trends occur all the time. That's why we'll use also a much broader time frame set kind of. So we use a lot of time frames to basically create our bias, so we don't get on the wrong side of the market. So I would probably start to look for shorts right here. So let's see what this market does. Comes down to the 50 MA, pauses right here. We are gonna start to use more time frames in the future to navigate us through, and especially if we are using a lower time frame. So in this case, a 50-minute. So this is a pause, of course. This was also a good pause, but we missed it. So we just wait for our 1-to-1. Our 1-to-1 is reached. So this is a break even. So this is another opportunity for us. We just simply cancel that. Let's wait for a pause. So you have a pause right here. We are flushing down to the 50 MA right here. And I think this is completely valid setup. Break-even point is reached. So let's wait for our 1-to-5. So this is a break-even. So let's see if new structure starts to build up to the bullish side, and it seems like it does. So you have a flush to the 50 MA right here. Kind of gets bought up with a new structure right here. So I would simply throw a buy stop right here. We would simply get tapped in because of that candle, and let's see. And get tapped out for -1. So you have this opportunity right here as well. Reaches 1-to-1, I think. Yep. So let's wait for a 1-to-5 or break even. shops around. Nothing for us to do. We're waiting for new structure. A new structure is coming in. Yeah, so you guys know I would never use only one time frame to trade asset. I think that's kind of a little bit of a suicide mission. I think you should definitely use time frames to see how orders are coming into this market. Like they are available for you, so why not use it, you know? But I think the only time it could be acceptable to use one time frame is if you are on a much more higher time frame. So let's say maybe a monthly or 6 month. Or as we have done in our previous videos, maybe even a weekly. But the lower you drop your time frame, the more you're gonna need to use other time frames to kind of see where you are in the market, right? To get the bias right. So flashes down to the 50 MA right here. Very wiki right here, but we don't really have a rule for that yet. So you have a pause right here. So we would simply just take this trade right here, buy stop this. Does this reach 1-to-1? This reaches 1-to-1. So we simply throw another buy stop at this point right here and record the first trade, which is a break even. Cancel that. So we just sells off. Actually starting to go to the downside here, new structure to the downside. Just waiting for a flush here to the 50 MA. Yeah, nothing for us to do. Why we're starting with one time frame and all like these kind of easy rules or very easy to follow is because I don't want to overcomplicate anything now in the beginning. I want to take it kind of very slow, so it's crystal clear everything what we do. So this is a pause right here, so we'll simply just take this. Like we are in no rush to get more advanced just yet, but those points will come, or those times will come definitely in the future. Alright, so we're starting to go to the bearish side, as you guys can see. Kind of pausing here, so this buy stop would be valid with these rules. Okay, so we would simply just cancel that because it took out that low, but here is another buy stop right there, or sell stop because it's reversed. Simply break even, or -1 I mean. So you have another one right here. I think this is still fine. So we get tapped into this trade. This is obviously a break even. So kind of wicks around in this 1-to-5, so we will simply just close the full position right here, +5. And new sell stop right there. Taps us in and taps us out. I think this might never mind, we're sell or got bought up. let's wait for a flush now to the 50. A very good pass here actually, and a very nice sell-off to the 50 MA. But we has failed the 50, so we'll wait for a new structure. Kind of starts new structure here. Let's see what this market does. This is a pass. I like these kind of sell-offs to the 50 MA, very slow and steady. So we record that to -1. Let's wait for a new pass. Just like that. We get tapped in. Is that a break even? It's not. And also, like, by using only one time frame, like, you're kind of restricting yourself from all that those things that is available for you. Like, all of a sudden, when you're only using one time frame, in my book, it starts to get more random, right? You want to eliminate that factor, that every single trade that you take are really consistent, which means for me that they look the same on every single trade that you record should look the same on those time frames that you trade, as I have spoken in my previous videos. So by only using one time frame, it becomes more random, right? Because yeah, like if you zoom out, like you're basically just trading. Well, you're trading kind of this setup on every whenever it comes, and this setup doesn't mean anything if you don't know where to trade this setup, right? So if you trade this setup in a bearish market, most of the likelihood of you losing money in long term will probably be much more higher than if you would trade this in a, or I know that's a fact, that the likelihood that you lose money would probably, or would be very high. But if you trade this setup in a up trending environment, then the likelihood of you being profitable in, let's say, 100 trades is much greater. So it's not about the setup, it's where you apply the setup. Remember that, guys. So yeah, this video was basically just a demonstration to you how this system would perform on a lower time frame. And as you guys can see, we are up 11 RR, and we took 1, 2, 3, 4, 5 -1s, which means that we are plus 6 in RR in total. And yeah, in my next video I was thinking that we will start to apply more time frames, so especially if we're trading lower time frames, so we can navigate in a much more accurate way through this market. But thank you guys for watching, and I see you guys in the next video.